still a pseudonymous figure that created Bitcoin, because essentially the creator of Bitcoin is still anonymous, and I've been telling that bad joke for now 2-3 years. So, but it's a new crowd. My name's Andrew Keys. Professionally, I grew up on Wall Street, UBS investment banking, worked at a Goldman Sachs-owned hedge fund, created a revenue cycle management company that essentially dealt with healthcare insurance payments. And from that experience, I saw how bad the payment rails are in investment banks and in insurance. At the same time Bitcoin happened, I researched and learned kind of about what the evolution of this technology could do, but didn't get very involved until I met a gentleman by the name of Joseph Lubin, who's here in the crowd, who's one of the founders of the Ethereum protocol, and helped him drive the creation of a company named Consensus. We are now over 350 people in over 20 countries. We really operate across 4 pillars. Product, we build protocols, we actually maintain 3 implementations of the Ethereum protocol. We build developer tools, and then we actually build products. Then we do enterprise and government consulting. So we teach Fortune 500s and governments what this technology is. And we elucidate use cases in sandboxes and scale them out into production systems. We have now an education arm where we're training hundreds of people a month on how to actually implement and develop these smart contracts. And then we have a new arm named Consensus Capital that deals in financial services of blockchain technologies.
Thank you, sir. Craig, if you will elaborate your introduction a little bit.
Yeah, sure. So Craig Fisher, I'm with the Office of Financial Innovation and Transformation in the Bureau of Fiscal Service at the Department of Treasury. My career has pretty much been government since I've been in DC 12 years ago. GAO, worked on the Hill for a couple years, OMB, did pop out to Deloitte for a couple years.
All the best do.
That's right. And then came back into Treasury, and really what I try to do is try to figure out and solve problems, some of the financial management challenges that we have for the federal government. So how can we manage our finances, better, more stewardship? And a couple years ago, blockchain and distributed ledger technology was one of those things that kept on popping up as the sort of new innovative technology, and it's really piqued my interest. So spent the last couple of years really trying to understand it and really try to educate folks within the federal financial management community of like, what is this and what are some of the potential things that we could seek out and do with this to improve the way that we manage our finances for government.
Nice. So, guys, I did a pretty basic overview of what is blockchain. What did I leave out? I mean, what would you elaborate, perhaps, or even correct?
So I wouldn't correct anything. I thought it was excellent. What I would say to kind of evolve our thinking is that this is essentially the next generation of the database and the next generation of the internet. And I think I would reiterate the importance of 2 concepts that you discussed. One is essentially the tokenization of assets. We started with this Bitcoin. Now Chairman John Carlo evolved the conversation into virtual currencies, but I would submit for your consideration that essentially we're going to be able to digitally represent any asset. So that is not just a commodity. So you are talking about oil, bushels of wheat, fiat, stocks, bonds, derivatives, Beyonce concert tickets, loyalty points. Any asset will be digitized, and we will fluidly be able to move them as quickly and as efficiently as we send emails today. So that's the first part. And the second part is to reiterate the importance of smart contracts. Instead of Microsoft Word documents, and I like Microsoft, and lawyers, and I like lawyers, that notarize agreements, our agreements are going to evolve into software. And essentially this is going to re-architect our business processes much more efficiently. And combining those really creates a next generational decentralized World Wide Web. And this will have as profound an impact to Earth horizontally, not just finance, not just public sector, not just insurance, horizontally. Anybody who uses the database and uses the internet will be affected horizontally, as the internet did, if not more.
So yeah, I think, Mark, you did a fantastic job of teaming this all up. And let me just appeal. He's probably at the 8 level. I'm more at like the 2 level. So let me just put this into context for folks that are just starting to understand what this is. And I think this whole technology was created to prevent double spending. And I think just to give folks a sense of what that is in a real palpable example, I have 2 kids. My family's back home in Nebraska. They keep on asking me for photos. So I'm making copies of all these photos that I take of my kids, and I'm emailing back home to my family. Well, in a blockchain world, I have to let go of that asset. I no longer have it. And it kind of creates this ecosystem where you can trade and exchange value and give it up, and you no longer. So that's a new way of thinking, and the technology that enables us to do that has some really unintended benefits. So it's more transparent. It's more secure, it's more resilient because you have all of these different nodes set up. So it's a really interesting thing to think about when we think about, well, what was it intended to do? It has all of these unintended benefits. Then you add the element of smart contracts on top of it, and it really changes the game because you can now install some sort of logic within the ledger and have it sort of these programs self-execute without having to do anything. There's no middleman there to do anything. So I think for folks that are sort of on the very early end of sort of understanding that, I think that's kind of how I'd frame it, is that this was meant to prevent double spending where you don't have an intermediary have to come in between there and say, oh yes, you have the funds to do this. But in doing that, there's a lot of benefits that can be added to this.
So, Craig, so given that, and the great characterization, both of you, thank you, why does Department of Treasury care?
Well, I think it's interesting in that when you have a piece of technology, when I think of when we're managing the nation's finances and we're trying to be good, you're sort of balancing a few things. One is like transparency, having enough information to make decisions and make folks accountable for what they're doing. Efficiency, doing things quickly and fast with as few resources as possible. And then also stewardship, making sure that we have the right internal controls in place to do these things. And now we potentially have a technology that's coming on here that's lifting all of these things up at the same time. And oftentimes when you're looking at solutions, sometimes these things compete. But here, you have a technology that potentially can raise better transparency, more efficient, and better stewardship over resources. Like, that's a pretty powerful technology that I think at least makes my eyes kind of...
No, that's excellent. That's excellent. And so the idea that I can apply it to operations for transparency and efficiency.
Right.
Not just treasury operations or financial operations. So, Andrew, you come from banking and insurance. And again, a lot of the examples that we've here, the more mature examples are in the financial services industry. Sure. Talk about what, if I'm interior, or I'm commerce, or I'm homeland, or and I know we'll hear more about this, by the way, particularly as I say homeland, but why might those other people care? They're not financial fiduciaries,
Well, I think everyone has their own budget that they could allocate more efficiently. Secondly, what you're seeing in this next generation database technology is the evolution of supply chains. And I think that would be very applicable to all of those departments. And to your point with diamonds, you can actually track the provenance. So the real-time fiduciary responsibility of assets and their chain of custody and their authenticity. We talked yesterday about departments that have a fleet of cars. You could essentially tokenize each vehicle across 3 departments, and if one department is not using that vehicle, you would have this next generation database that you could see in real time that one of these assets isn't being used, and maybe you could loan it to another one. And then rather than having these assets sitting, they could be put to use more efficiently.
Excellent. So the idea of sharing economy. So Zipcar as an example out on the streets here. And what if there were the government equivalent of Zipcar? Well, if my agency is paying for the care and upkeep of the vehicle, I'm not sure I want another agency just sort of, essentially riding for free. Well, what if we could book the transaction just like Zipcar, in fact, does that exact same thing, and the cost and facility and the use and payment would be balanced?
Exactly.
I love that. Sources and uses right? This time of year, look, it's 20 September. There's a bunch of money who has a color that's going to be done in about 10 days, right? Color of money, sources and uses of funds. What if every dollar that were budgeted, be it programmatic or legislatively funded or otherwise, wasn't just $100, but 100 serial numbered dollars? And when I needed to reprogram money, I could do it very specifically on the ledger, which creates a full audit trail of specific dollar values from source to use, sources and uses, right? How interesting might that be?
And you could also program the money to only be spent on certain types of budget allocations.
Yes.
So you could literally have arbitrarily complex business logic that determines that this money can only be spent on cars, for example, or raw goods, raw materials. So you can just kind of program that out.
Consultants, that could be spent on consultants. Good. Gentlemen, last thoughts. So as the day progresses on, there's going to be people who have been there, done that. We're going to have some TED Talks, or tech talks, which I think are just going to be cool, of people who are here that can show you some real hands-on. As you talk to this, and again, we were sort of 60% between 5 and 1, and about 40 or maybe 30% between 6 and 10. Last remarks, you would say to these, as you look at, is it important, is it going to be impactful, and is it urgent, do you need to address now?
I mean, I think from my perspective, within the federal financial management community, we do have a lot of challenges. We have over $140 billion of improper payments. We have billions of dollars of intergovernmental differences. We buy $125+ billion of equipment and software licenses, and there have been some folks like GAO who are critical on how we actually manage these things. So I think what distributed ledger technology does is it gives us another tool in the toolbox that we can look at when we're applying these things to some of the problems that we have. But I have to say too, I mean, this is my perspective, is that when we are looking to do something solving these problems, I think where we are right now, I think you have to crawl before you walk, and I'm not even sure if we're even out of the crib at this point for with this type of technology.
Rollover, is that?
Yeah, we're still rolling over. So I think there's a huge, especially with the federal government, there's a huge sort of understanding and learning component. So starting small, understanding its capabilities, and this understanding what this technology does, it's different. It's a decentralized model, and I think we're used to centralizing things. So there's a whole new sort of mindset and new paradigm that we have to think through as we apply these to the challenges that we face ahead.
Well done. The idea of who owns the blockchain, right? Who owns the blockchain?
Depends.
Yeah.
It depends.
It depends?
Yes, absolutely.
Yeah. So no one essentially knows, in this very strange private blockchain world, somebody owns a blockchain. In a permissioned and certainly public blockchain world, it is collectively owned, right? It's like a condo association, sort of. It's your condo association for your ledger, right? Good. Andrew, last thoughts for the audience.
So, two last thoughts. I commend Lab CFTC. And we're seeing these types of sandboxes all around the world. The Financial Conduct Authority in London has just created a laboratory. Monetary Authority of Singapore, Hong Kong Monetary Authority. Dubai has decreed that they will actually blockchainify, if that's a verb, all of their government documents by 2020. So we are seeing kind of use cases being elucidated in these safe sandboxes, and then scaling into proofs of concepts, and then eventually scaling into production systems. And I think that that's a very efficient way to think about how to kind of dip our toes in, or rather than go to a swim. And then the last piece that I would submit is that, to your point, what we're creating now, instead of a company or an organization owning the database, is we're creating these marketplaces. And we're finding kind of price discovery mechanisms for intermediation. Right now, we are the product of Facebook, or our information is on Equifax, or our information is in Bank of America. Those intermediaries are siloing a lot of this data. third-party intermediation. And basically what this is creating is the ability to distribute that information much more securely and to have a price discovery mechanism for trust and to automate our business processes.
Not to say it's hacker-proof.
Not to say it's hacker-proof.
No such thing as hacker-proof. It's just tamper-evident. Good? A couple of questions for the smart guys on the stage, and I'll stand over here so you can figure out that that's those guys. A couple of questions. Right here in the middle. Wait for the mic if you don't mind. The room is big enough that...
Hi, good morning. I just have a question about the adoption of blockchain and how much is that dependent on legislation from the government side? So I think the technology is there. It's just a huge push that's needed, right? And I think probably legislation has a lot to do with that. So I'm just curious, especially for you, Craig, from your side, what do you see as far as that's concerned?
To be honest with you, I've given that some thought. I don't see any sort of legislative hurdles that would prevent us from sort of doing this in more of like sandbox ways just to understand it. I think, you know, as you get down into more of the cryptocurrency space, which I'm not, and that's I should say, I'm divorcing the cryptocurrencies from the technology. I'm looking at the technology to how to help solve problems. So I think, from sort of the use cases I'm looking at, I don't think that it would need any sort of legislative sort of amendments to go forward. I think right now it's just and I'd have to look at each use case to see, you know, depending on what, sometimes laws are very narrow. But right now I don't see that. I think it's just more like understanding what the technology is, and I think that's where we are right now. So that legislative hurdle might be a little bit further down when we understand it a little bit better.
It's a good question, a good response. The question frequently formed around cryptocurrencies and even digital fiat currencies.
Right.
Clearly regulatory environment there, value exchange perhaps, even contract automation. Your point being there's a lot of use cases that are just within your grasp, right?
Right.
Nicely done. One more question for the audience. Right up here, please. Quick like a bunny. Go ahead and say it and I'll read it back out.
I'll try to speak loudly. I know that we're still early in the technology, but can you address the cost of the transaction? I know it's not free, data center costs are real, and who is going to bear those costs, or how do we figure those out? Or do we have to eventually wait for a Netflix Verizon battle over bandwidth to figure out where the costs are borne for the transaction? And to follow on from that, from a performance standpoint, you said the database is fully distributed. We still see the need for data marts, data warehouses to extract information. Where's the line between allowing this thing to be fully distributed and pulling copies of information into a data warehouse? Just trying to get some sizing perspective on where we're going.
So we're going to go down the rabbit hole a little bit, and I apologize to all the 1 to 5s, but you have to bifurcate your blockchains into permissioned or permissionless blockchains. The permissioned do reside into clouds or on data warehouses, so there isn't kind of a marginal additional cost per transaction. So it would be the same thing as having an Oracle database on an Azure cloud, for example. The permissionless databases require micropayments of kind of a fuel, and they are pennies per transaction.
And performance?
So what we're seeing right now is that I think that we're in the equivalent of kind of 1993 of the internet proliferation in 96, and many companies and federal agencies are working on these permissioned blockchains, and you can change the consensus algorithms as a kind of a trade-off, and based on that you can have larger transactions per second and have less throughput. And in the permissionless settings, you can essentially, there are evolutions of kind of transactions per second improvements by changing the consensus algorithms and having what are called state channels, where you can essentially batch transactions. So there are kind of different ways to approach it.
That was good. That was about a 6 or a 7 piece of the explanation. Did that speak to your point? Excellent. Thank you, Craig. Thank you, Andrew. Thank you so much. Excellent. So it's my pleasure now to invite onto the stage moderators of our next panel, Kambiz Abdolrahimi. Did I do it right, Kambiz? Where are you? So did I get close? And Mark Greathouse, my partner from Deloitte. Also, go ahead and invite up now distinguished panelists for this next session, Todd Miller and Mark Wedgen. Are you guys here? Did I do okay, Abdolrahimi? Okay, good.
You got mine right, and
That's important, Mark, yeah. That was hard. Thank you. Hey, how you doing? Come ahead.
Fly down here.
Oh, yeah. All right. This is good.
Hey, Mark, nice to meet you.
Oops, sorry.
So welcome, everybody. My name is Kambiz Abdolrahimi. I'm Senior Policy Advisor at Treasury. I'm also an attorney and the Deputy Government Chair for the Blockchain Forum today. Before we begin, I wanted to thank the sponsors and also ACT-IAC for putting this together. And in particular, I'd like to recognize Carol Miller right here because, honestly, Carol, without you, I don't think this would have been able to come together. So really, thank you. So this panel is called Tangible Applications and What We Have Learned. We have with us today some of the leading experts who are integrating a distributed ledger technology blockchain solution for specific use cases. We have Mark Wedgen, who's the Managing Director and Head of Global Public Policy Government Relations for the Depository Trust and Clearing Corporation, DTCC. Prior to joining DTCC, Mark served as a commissioner for the Commodity Futures Trading Commission, where he oversaw the implementation of the world's first trading mandate for certain interest rate and credit default swaps. And he also led efforts to make the global derivatives market more efficient through the harmonization of regulations around the world. We also have Todd Miller, who's the U.S. representative for ChromaWay. It's a leading blockchain software provider based in D.C. Todd leads the company's strategy for partnership creation and business development for the U.S. market. Todd joined ChromaWay after 15 years working on mortgage technology initiatives with Fannie Mae. I will now join this panel, but I will turn it over to Mark Greathouse, who is co-moderating this panel with me.
Great, thanks, Kambiz. Good morning, everybody. So this is really exciting. I was thinking about this panel last night, and the movie Saving Private Ryan kind of came to mind, and not because I think I'm Matt Damon or anything like that, but there's that just phenomenal opening scene, right, when the troops are storming the beaches, and the first guys off, you didn't want to be the first guy off the boat, right, because it just didn't work out well for them. So if you kind of think about blockchain as the beach, and these guys as the first guys kind of off the boat to storm it, which, by the way, I have no doubt it will turn out better for you than a lot of the first guys off the boat. But it's really exciting to kind of hear what's really being done out there, and how these guys are making this kind of emerging technology a reality. So with that, I'll let these guys kind of go to it.
Thanks, Mark, and thanks, Kambiz, for asking me to be here this morning. It's a pleasure to share some of what's been going on at DTCC as it relates to this technology. I thought I'd first start with just explaining a little bit about what our company does. Perhaps some of you in the room are familiar with our services at DTCC, but perhaps many of you are not. So we are the only clearing and settlement service provider in the United States for cash securities. So all equities and fixed income transactions in the United States on exchanges and other types of venues ultimately are cleared and settled by DTCC. So to give the audience a sense of the size and scope of the transactions that are coming through our company, on the equity side, the cash equity side, our clearinghouse there clears and settles almost $1 trillion per day. It's about $988 billion in transactions. On the fixed income side, transactions going through our fixed income clearing corporation, we are processing about $4 trillion of activity each day. So it's an enormous amount of volume that we're clearing and settling on a daily basis. If you add that plus the other various services that we provide, which include matching type services for the buy side, as well as some various swap reporting services globally, we are processing about $1.5 quadrillion of transactions each year. So it's an enormous amount of activity that we see and process at our company, and so it actually gives us quite a good perspective on a number of different things, including what some of these new technology applications can do and how they can be beneficial to a company like ours. I thought it'd be useful to explain the scope and scale of what we do, because it's very, very relevant to the various use cases that have been identified as possible use cases for blockchain technology. And on the clearing and settlement side, for both cash equities and fixed income, the efficiency of what we do is actually extraordinarily high. So the cost of providing the services that we provide for clearing and settlement is very, very low. It's a fraction of a penny per transaction. And it's extraordinarily fast. So one of the things you hear about a lot in this debate and how the blockchain might be useful as it relates to securities processing is that you can basically clear and settle, not so much clear, but settle in real time. And while that might be true for certain blockchains, some others do not have that capability or capacity at the moment, but some certainly could be designed to have that capability. The fact is that's a capability that exists today. As I said, our systems can basically on a real-time basis clear and settle a transaction immediately. The issue is how do I best put it? There's two factors. One is policy or regulation, and then the other is just practice, the practice of the industry, at least here in the United States. That actually is mostly true overseas as well. The practice today is that transactions in the cash space in the United States, as of last week in fact, take 2 days to settle. And the reason for that is, again, by virtue of regulation. The SEC just finalized a rule in the spring contracting or compressing the amount of time that it takes to settle a trade. It used to be 3 days after the execution of a trade before it would settle. And the other factor is that's essentially what has become, again, the practice of the marketplace. You have an assortment of market players in the cash space, as you can imagine, and some are very much in favor of instantaneous settlement, and others are not. And there's a variety of reasons for that. Some are, frankly, this is only my own opinion, some reasons are not so good, and then other reasons are actually pretty legitimate. But just to give you one example, there's something to be said for the ability to offer securities lending. If you have instantaneous settlement of a security, it's very, very difficult to lend the security out. So that's just one example, and there are others as to why we have the standard that we have today, which again is this period of 2 days after execution when the trade actually settles. So as you could probably predict, we don't see blockchain as an especially useful solution or a way to improve that set of services that we provide. We are, however, looking at it on one pretty narrow marketplace, although it's a big marketplace, and that's the fixed income repo marketplace, and we've been examining as to whether a blockchain solution could be helpful there. But it's mostly, in that case, it's mostly a play to try to bring information into the clearinghouse. It's not so much using an application on a blockchain to provide the processing itself. I've spoken for a while, but let me just mention one other use case that we are actually pursuing and is in production currently, and we hope to have it go live sometime early next year. As I mentioned before, we have a trade reporting business, a global trade reporting business, and the predecessor to the overall global business we have now was something that we call the Trade Information Warehouse, and it was a service for a very narrow asset class, in this case credit default swaps. And basically what that business does is keeps track of and serves as a central database for all of the positions that various people have in the CDS market. And the other important thing that the service does is if there are any life cycle events that trigger certain payouts in a credit default swap, then we process those events and execute the cash transfers and the rest of it. So this is a business where there's quite a bit of costs associated with the fact that there's a lot of reconciliation that has to happen between various parties who are trading in CDS. So even though we all operate as a central database, keep that information on behalf of the marketplace, or at least the users who use the service, every firm that is trading in CDS has its own database. And they oftentimes keep the same, they keep information about the same trade in a different form, a different format, perhaps using a different language. And so that can create some problems with regard to discrepancies between what one Wall Street firm might say is their position vis-a-vis another Wall Street might say is their position, or the same position even. So we think that by replatforming this particular service I mentioned, the CDS service, onto a blockchain where we also have running on top of it a smart contract application that automates these life cycle event processing service that we offer. In the end, there might be a significant upfront expense to replatform the service, but in the end, it could really drive down costs for the firms that use it, because it'll eliminate these discrepancies that I mentioned that currently take place due to the fact that every individual firm has its own database. So it's still relatively early in the process, but it is in production. We have been moving forward. We have partners in IBM and another software provider called Axoni who are working with us on this, and we think it holds a lot of promise, but we'll see.
Great. Todd.
Yeah, hi. Actually, I want to say to Mark, I thought that, first of all, my name's Todd, I'm from Cromway, and I liked what sort of Mark, his presentation in terms of sort of the process that sounds like they're going through in terms of looking at, hey, what are our core business areas, what are our core transaction sets, and what makes sense for a blockchain implementation, what doesn't make sense, and so forth. And, you know, I'm just kind of looking at the Deloitte criteria here, which I thought was, you know, really useful. It's sort of, you know, one of them didn't really tick off, maybe ticked off one, but the last example around the reporting really ticked off 4. So I think that's a great way for us in the room to sort of think about, you know, what are good use cases. So anyway, so yeah, I'm Todd Miller. I'm actually in a little bit of culture shock. I was in Israel last week. Cromway is it's a Israeli-Swedish combination. So we have our founders, 2 from Israel and 2 from Sweden. And I think we have the combination of the sort of security and cryptography from Israel, and maybe the socialist data sharing from Sweden or so forth. So hopefully that makes good sense for sort of what the blockchain is really about. Culture shock only because I was at a conference at the Technion in Haifa, which is just kind of an MIT of Israel, and I was wearing blue jeans and a kind of a button-down shirt, and I was completely overdressed. In fact, Vitalik Buterin, who many folks in the room, obviously the consensus people and so forth, are familiar with, is one of the kind of founders of Ethereum, and he was wearing sort of a ripped T-shirt. He's 24 years old, and it sort of reminded me sitting here this morning of maybe the sort of 2 sides of the blockchain. On one side, there's sort of the crypto world, which is sort of the Wild West. Anyone can look at their Bitcoin wallet this morning or so forth, and may see kind of the ups and downs of it. But then maybe, as sort of Mark pointed out, the distributed ledger world, kind of where we're sitting today with our suits and dresses and so forth on, is the more sort of control world in a way. And actually, it in many ways is sort of an extension of distributed computing and so forth, and the progress that has been made the last 20 years around digital signatures, around distributed databases, around consensus mechanisms, and so forth. So the wonderful thing about blockchain is even though it's new, actually a lot of the underlying technologies have been around for a while, and those in combination with the internet and some really kind of insightful ways of thinking about around security. The notion that Nakamoto, whoever he is, whoever they are, whoever she is, came up with a really brilliant idea of this open ledger where we actually let people who may attack the system into the system, but they would be presumably overwhelmed by the fault tolerance system, meaning that it's a voting system, the consensus mechanism, and hopefully 51% in the public blockchain world, our consensus mechanism is 2/3, something called Byzantine fault tolerance, that you can reach sort of really new levels of security because of a different way of looking at security. So that's very exciting. So ChromeAway, again, we're on the kind of permission side of blockchains and so forth. Our sort of genesis was really out of this innovation called colored coins. These were sort of an early attempt, actually successful attempt at anchoring other assets to the Bitcoin blockchain. So actually a lot of these, there are many colored coin implementations around the world, mostly around fractional investment of either startups or property and so forth. So it's innovative. Now, tokens have are sort of the new technology for that, but that was sort of an early step. That's why Chroma is color in Greek, colored way. What our sort of teams looked at and said, well, to introduce blockchain to the commercial and government world, you need to deal with the realities of that environment and the realities of relational databases. So one thing that ChromeAway does, we integrate with SQL type or non-SQL type databases. So one of the challenges I'm sure some folks in the room have around is if you're going to stand up a blockchain innovation and so forth, are we going to have to introduce a new set of technologies, a new set of protocols, a new tech stack into your environment? And that's not easy. So the degree to which you can use your existing platforms and still participate in a distributed network, it's going to make the implementation a lot easier and the testing a lot easier. So we actually got really accelerated in the distributed ledger area with a project we're doing in Sweden with the Swedish Land Registry. This started in 2016, and folks know that title and property registration is sort of a nice fit use case for the blockchain. And the Swedish Land Registry, it's the national registry, different than the US, where of course each county has their own recording office. In Sweden and in most countries in Europe and around the world, they're mostly national registries. So the registry was very interested in testing out a blockchain proof of concept. In 2016, they formed a consortium. They were the anchor member. Again, in terms of implementation, I think one of the lessons learned is even though blockchains are around sharing, you can't really do it yourself. You need to have, and I'll borrow from lawyers, you need to have standing, meaning that you need to be in some position in order to launch a consortium, even though you may be giving up you may be disintermediating yourself in terms of, I have this senior role, but now I want to move to a shared environment. You need to be able to sort of harness the other teams together in order to build that kind of platform. So anyway, the land registry, there were 3 banks that joined. In terms of identity, Telia is a large Scandinavian telecom provider. It's sort of like AT&T and Verizon. They provided the ID for the public and private keys. And then there was a strategic consultant who kind of organized and supported the consortium, and then ChromeAway was selected to provide the platform. So the project was about 15 months. First 3 months were actually spent on design. Interestingly, the registry initially wasn't so interested in putting title records or testing title records and putting them in a blockchain format. They sort of recognized that's not really the big challenge. The big challenge is the path to the registry. And again, it's been mentioned earlier this morning, the great value of blockchain is really around the supply chain, meaning how did it get to the door of the registry, and each member of the consortium could participate in a workflow that worked with the banks around the mortgage and so forth, and that was all all that information was sort of captured on the registry and so forth on the blockchain. So the prototype of the project finished in July, and then later this month, the production release is starting on a phase 1. So.
Great. Thanks, Tom.
Yeah.
So you brought up something about consortiums, and I actually triggered a question for Mark. So from there are a lot of talk around consortiums, around, when to join, which ones to join, do you create your own? And think from the DTCC perspective around the CDS kind of use case, how are you guys approaching that?
Well, very, very bluntly, it's a problem that's addressed or solved by our governance structure. So DTCC is a user-owned company, and we actually think that that's quite an advantage in all of this debate, and could be a useful and beneficial distinguishing factor for our organization going forward, because, as you point out, one of the issues here is how do you herd the cats and get everyone to agree on a certain set of standards, perhaps even a finite number of platforms that, or even chains that people would want to use, and how to make those interoperate. But by virtue of our governance structure, that piece of it is in many ways solved. I forget exactly how many owners we have, but it's somewhere in the realm of 200 plus firms who, again, are users of our service. So that's how we think about it. So we think that this governance issue is really important in all of this debate, because the thing that's important to remember is, well, let me take a half step back. Convis mentioned in the introduction some of the work I've been part of on the harmonization front globally. And that work is not done, and there's a lot of work that needs to continue happening, especially in the trade reporting space. We have all the G20 members who have adopted these swap data reporting regimes around the world, and the regulatory frameworks around the world are not harmonized terribly well right now, and what that means is that it makes it harder for the official sector to try to actually aggregate the information from all these jurisdictions and make sense of it and truly understand what the risk profile is of a global firm. So it relates to the blockchain debate, because, again, if you have a handful or more different chains that firms in our space are using, how do you make sure that they interoperate? How do you make sure that they speak to each other effectively? And all of that is going to be driven by efforts towards standardization, and you need some kind of structure to force that standardization throughout the industry. And there are trade associations that potentially could take that role as well. There's potentially a role for government to play. But as I said, we I think stand to benefit in some respects, in many respects, given the fact that we have this governance structure where we are owned by our users.
You're kind of already your consortium.
We're already a consortium, in essence, yeah.
Okay. And I know we're on time, but I do want to give folks a chance to ask a question of Todd or Mark out in the audience, if you have a question out there. No? Okay, great. Gentlemen, it's been great. It's been very informational. Really love the insight that you provide this morning.
We have one question.
Oh, there's a question. Ah, great.
Hi. I'm just hearing the happiness in this. Is there any limitations that you encounter, like something didn't work because you've been working for probably 1.5 years, I guess, right? So did you come across any limitations that needs to be addressed right away now, or you're waiting for something? Anything in your experience, like?
Limitations?
Yes,
from-
limitations
from
on
the technology?
implementing this idea, yeah, the technology itself, like.
Yeah, I mean, I'll just take that. I mean, one challenge is going to be on the identity side, correct? So in the Swedish land registry example, again, I mentioned the telecom company was able to provide the identification, but it's almost kind of sort of a partial solution because, well, that's only one company that may be issuing smartphones. That's not the whole population of Sweden and so forth, or any other country. So, you know, there's no universal ID right now. There's a lot of companies working on it. There's a lot of thought about it, but that's certainly, you know, one kind of technical challenge we'll have to overcome.
I can just add real quickly, one of the issues, frankly, is that you have a lot of vendors in this space who are brand new. They're startups, and many of which have not been tested in a way where they have to have an enterprise-ready solution that really can meet the standards of resiliency and that type of thing. So I mentioned the partners that we're working with for our blockchain project, and one of them is IBM, which of course is a very well-known organization, but even for them, the technology is somewhat new. And then the other partner that we're working with is a startup. So, those are some things that I think we have to work through, and I don't want to say have created challenges, but it's a different experience working with new startups with new technology as opposed to established firms with well-known, well-tested technology.
But I would say that that's not unique to blockchain, right? I mean, that is any new emerging technology, you know, challenge from a kind of vendor, provider, you know, landscape, and you know, you have the onrush of the startups. You'll have you know, a rationalization period, and then you'll have a level of kind of maturity, right? That's you know, I don't think that's a blockchain specific challenge, right? But an important challenge to figure out along the way.
Yeah, I was also just going to add that, you know, one interesting divergence, people are talking about this next generation around blockchain, really around protocols, meaning that it sits on top of or communicates between core technologies that governments or companies have. So the risk is a little bit less in terms of you're not talking about swapping out whole